Namaskar dosto, welcome back to Dhwaj Stock Info. Right now, as you are watching this video, Nifty 50 is trading at 23,830, Sensex is at 76,413. The market was weak today. Yesterday it was up and today it is weak. But here is what most investors are missing right now. The market has been falling for 4 consecutive months, and in the entire history of the Nifty that has happened 7 times. Yes, 7. You know what happened after each of the 7 times? The market went up significantly, and the investors who knew how to read continuation patterns were already positioned. In the next few minutes, I am going to show you exactly how they did it. In the episode 1 through episode 4, we have covered fundamentals, how to pick stocks, build a portfolio, read annual reports. In the episode 5, we learned the basics of technical analysis, and in episode 6, our most popular episode yet, we covered 6 reversal patterns: shooting star, engulfing, morning star. Today is the part 2 of the candlestick education. Reversal patterns tells you when the trend is changing, but today's pattern is different. They tell you when the trend is continuing. And right now, with the Nifty finding support and potentially beginning a new uptrend, the patterns are more relevant than ever. Before we dive in, quickly, an important distinction: think of stock market like a road journey. Reversal patterns, which were covered in episode 6, are like U-turn sign on the road. They say the direction is about to change. Today the pattern is different. They are like a highway sign, and that says road is clear ahead. Keep going, same direction, more speed. That is the continuation pattern. It appears in the middle of the trend and confirms the trend will keep going, not reversing, continuing. This distinction will save you from one of the most common mistakes beginners make: confusing and continuation patterns for the reversal and exiting a perfectly good position too early. What are reversal patterns? In episode 6, appear at the top and bottom signals, trend is changing direction, action, enter or exit the trade, hammer, shooting star, engulfing, morning star. We have covered in episode 6. Continuation patterns appear in the middle of the trend of the signal. Trend is continuing action, hold or add existing trade. Examples: 3 white soldiers and 3 black crows. Marubozu rising window, covered today. What is this continuation patterns? Here are the 4 most powerful continuation patterns used by the professional traders in India right now. These are the most obscure patterns. These appeared on the Tata Motors in January 2026, on Infosys March 2026, on the Nifty Bank just this month. I am going to show you each one on the real chart, then give you the exact rule, trade it. Let's begin. 3 white soldiers. The story behind it: after fall or pullback, 3 consecutive green candles appear. Each one opens within the previous candle body and closes higher. Buyers are stepping in with increasing confidence for 3 sessions in a row. These sellers have completely given up. The sellers have completely given up. What is the real Indian example? The Tata Motors January 2026, 3 consecutive green candles appeared after the stock fell 30% from its peak. Stock rallied from 850 to 1050, a 23% gain in a week. This was visible in TradingView chart. The white soldiers appeared right at the bottom. What is the trading rule? Enter on a close of the 3rd green candle. Stop loss below the low of the first candle. This pattern works best for the 20% plus decline with RSI around 30. According to 2025 backtest, 68% profitable with an average of 8.5% given over 30 days. Confirm always with volume increase each day across 3 candles, RSI below 40. When pattern starts, each candle closes near high. No long upper shadows. Moving average pointing upwards are about to cross. Open TradingView right now. Search Tata Motors. Switch to weekly chart. Go to January 2026. Do you see 3 consecutive green candles after massive correction? That is Three white soldiers in action on a real Indian stock. The stock went up 23% after that. You did not read, you did not need any news, you did not need any annual report. Two things told you buy: the pattern and the volume. That is the power of continuation patterns. Then the three black crows. What is it? The story behind it. The exact mirror of three white soldiers. Three consecutive red candles after the bounce of a rally. Each opens within the previous candle body and closes lower. Sellers are relentlessly pushing the price down. For the three consecutive sessions, the buyers have given up. The real Indian stock example is Nifty 50 after September 2024 peak at 26,277. As the market began its fall, three black crows appeared on the weekly chart, confirming the downtrend. Investors who spotted this excited and avoided 17% fall that followed to 21,850. What is the trading rule? Consider exiting long position on the close of the third red candle. This is the warning to get out. Work best for the 10% plus rally, RSI above 60. The pattern warns that the rally was fake bounce. The downtrend is resuming. Do not add positions when you see this. Confirm always with volume increase. Sellers are getting stronger, not weaker. Each candle closes near its low. No long lower shadow show buyer recovery. RSI is above 60 when pattern starts. Pattern appears after the clear bounce within the downtrend. The three rows. If the white soldiers is the most hopeful pattern, the three black crows are the most ominous. 3 days in a row, sellers completely dominating, prices closing at the low each every day. If you see this pattern on the stock, you can own after it has just had a bounce. That bounce is over. The trend is back. Consider protecting your profits. We saw this on the Nifty after September 2024 peak. Three black crows appeared and confirmed what the shooting star had already warned. The fall was real. Then Marubozu, the pure momentum candle. The story behind it: Marubozu is the most decisive single candle in all of the technical analysis. It has no upper shadow or no lower shadow. The price opened at the absolute low, closes at the absolute high. Bullish Marubozu, or opened at the absolute high and closed at the absolute low. Bearish Marubozu. No hesitation. Pure buyer on seller dominance for the entire session. The best example is Infosys March 2026. A large bullish Marubozu appeared on the daily chart as the stock broke above the resistance. Price moved from 1,850 to 2,100 in the following weeks at 13.5% gain. The Marubozu appeared on the high volume, confirming institutional buying. Similar patterns visible on ITC, up 3.79% with a strong volume. What is the trade rule? Bullish Marubozu, consider buying. Strong momentum is continuing. Bearish Marubozu, consider exiting. Sellers are completely in control. The bigger the Marubozu candle, the body relative to recent candles, the stronger the signal. Always confirm with the volume. Volume on Marubozu day must be significantly above average, ideally 2x or more. Appears at or just above the key resistance level for bullish. Appears are just below key support for bearish, combined with RSI momentum for confirmation. The Marubozu is my favorite candle signal because it is completely unambiguous. There is shadow to confuse you. No interpretation needed. Pure strength from the open to close. Look at ITC today on your trading view, April 29-26, up nearly 4%. Open trading view right now while watching this and check if today's IDE candle is Marubozu or close to 1. If it is, that tells you the move is strong and backed by the conviction. That is live market analysis happening as we speak. Then the rising window, the gap up signal. The story behind it: rising window is simply a gap up when a candle opens above the previous candle's high with a visible gap between them. The gap is called the window in Japanese candlestick terminology. It means buyers were so eager to buy, they did not even wait for the price to come back yesterday's close. They bought at higher price immediately at the market open. The best example is in April 2026, multiple gap up openings have occurred in Nifty. Bank recovered from its lows. The index gapped up above the resistance zone, signaling institution accumulation. Nifty Bank closed at 56,565 on April 28, up 477 point. Stock like Garden Ridge gapped up 14.4% and Bandhan Bank gapped up 9%, creating a rising window. So what's the trading rule? The rising window is very bullish continuation signal. The gap up itself becomes support. If the price comes back to the gap up zone and bounces, that is the excellent entry point. The rule is gap up is not filled with 3 sessions. The uptrend is strong if filled quickly. Be cautious. Always confirm with the volume and gap up session. Most must be high. Confirm genuine demand. Gap up should not be immediately filled in the same session. Watch for the price to consider near the gap up level. Then continue higher. Best when gap up occurs above the key resistance level, that then becomes support. The gap up is the market most honest signal. It means so many buyers wanted in. They pushed the price higher before the session even started. Look at what happened in the Nifty Bank just this week. It gapped up above the resistance, that is the rising window, and it has been reliable entry signal for traders who knew what to look for. When you see a gap up on your stock after a downtrend, check if the gap up holds. If the stock does not fall back below the gap up within 3 sessions, the momentum is real. Consider entering on the next small pullback towards the gap zone. Now the quick reference. Here is your complete cheat sheet for the today's 4 continuous patterns. Stop the video right now. Pause the video. Screenshot this table. Save it on your phone. Every time you look at the chart and spot one of these formations, refer back to this. This single table is worth more than most paid courses. Yes. 3 white soldiers, 3 candles. Signal is bullish. Buy or hold. When to use? Uptrend is resuming after the pullback. Reliability is very high. 3 black crows. 3 bearish candles. Exit immediately. Downtrend resuming after the bounce. Reliability is very high. And the bullish Marubozu, 1 candle bullish buy, strong breakout or momentum day. Reliability is very high. Then bearish Marubozu, only 1 candle bearish, exit, strong breakdown or sell off today. Reliability is very high. Then rising window, 2 candles bullish, buy on a gap. When to use? Gap up above the resistance, gap up, and reliability is very high. Then next pattern is falling window. 2 candles will be there and the signal is bearish. Exit immediately. When to use it? Gap up down below the support downtrend, but reliability is very high. Always remember a golden combination. Now I want to show you something that no basic chart course will never tell you. The real edge is not in the knowing one pattern, it is knowing when the multiple signals align. I call this golden combination. When you see that continuation pattern plus RSI confirming momentum plus volume above the average plus the pattern appears at the key support or resistance level, your probability of being right goes from 60% to over 80%. Let me give you the real current example right now with Nifty trading at very low and coming off 4 consecutive sessions in the month. If the 3 white soldiers pattern appear on the weekly Nifty chart in the next few weeks, the RSI below 40 and rising volume, that would be one of the highest probability buy signals of the year. Keep your trading view open, watch for it always. Then so here is what you need to do today, not tomorrow, today. Open trading view, do tradingview.com. It is completely free. Search for Nifty 50, switch to the weekly chart, look for any of today's 4 patterns forming right now. 3 white soldiers, Marubozu, a rising window, and then check Nifty Bank chart. Then check one stock you already own or any patterns forming, come back and comment below. I want to know what you found. I reply to every single comment every single day. If this episode helps you to understand continuation pattern, please like this video and share with your trader friends who keep second guessing their trades, and subscribe because episode 8 is coming next week, and it is about dividend investing, how to earn money from stocks without selling a single share. You will not want to miss that one. Please subscribe, please support, please like and comment always. My earlier videos, link is in the description below. Please see, please like. Thank you so much for watching.